right, there we go. So my name is Matt Kandiuk, as Paul mentioned. I'm a senior corporate trader with Western Union Business Solutions. I've been with them for over 6 years now. Joining me today are my colleagues Mel Francis, who's the head of dealing, Guy Bottomley, who's a business development executive, and Chris Day over there is the head of partnerships for Canada. So let's look at the agenda for today. Just grab the mic off here. That's better. So let's go over a few of the topics for today. So initially, we'll go over the differences between Western Union and Western Union Business Solutions. Then we'll get into a few of the challenges that mining companies like yourselves are facing. And finally, we'll end off with a few key takeaways. There we go. So who is Western Union? Most of you have probably heard of us from back in the 1800s, back in the horse and buggy days. But really, it's a technology company that's evolved over the years to where we are today. So we've been around for 168 years, and as you can see, we decided to get into the business-to-business space several years ago. Okay. So as you can see, Western Union Business Solutions was created to set up the business-to-business side of Western Union. So we operate in over 200 countries and territories and over 130 outgoing currencies and 30 incoming currencies. Okay, so what are some of the challenges facing mining companies like yourselves? The first is, of course, raising funds. That's crucial. Then we'll speak about delivering in local currency, risk management, and credit. So where I can really help you and where our firm comes into play is in terms of delivering in local currency, risk management, and credit. So first off, let's touch on delivering in local currency. So on this diagram here, I'll step down, you'll see where the main Canadian mining assets are located outside of Canada and the US in particular in our case. So the darker the color, the more distribution there is there, or the more concentration there is there. So if we look at South America, for example, if you look at Africa, you'll see a high concentration there in some countries of Canadian mining assets. But honestly, you'll see it from everywhere from North America all the way to Australia. So what does that mean to you guys? You have to make payments in these countries, to pay for your operations. So we're able to deliver, in Brazil, in Mexico, South Africa, Zambia, and Africa, for example. So why does that matter to you? What are the benefits of delivering in local currency? Well, probably the most important is that you know the amount that the beneficiary will receive, okay? So say you send US dollars down to Brazil, for example. You don't know what the amount that the beneficiary will receive in Brazil, right? So say you send US dollars today, they'll probably receive the funds in 4 or 5 days, and given market fluctuations, given bank fees, the beneficiary banks in Brazil will often charge high margins as well. So that's going to really have an impact on your bottom line in the end. Also, you look at lower fees, there are less banks involved. The more banks that are involved, the more fees you pay, right? And then finally, faster processing time. As you can see, wherever Western Union can deliver locally, the chain here is the steps are much fewer, right? So you have a customer, the Western Union bank account, then the beneficiary. And if you look above, you'll see how the correspondent bank will work, and you have many more steps there. So say you send CAD from Canada through a bank to Brazil, it'll go through your correspondent bank, probably get converted to US dollars at the first intermediary bank, and then to Brazilian reals at the next intermediary bank. So along the way, you're losing quite a bit. The next challenge we'll discuss is risk management. So what is FX risk management? So there are risks that you can control, right? So interest rate risk, commodity prices, and FX, thankfully, is one of them. And then you have risks like environment, political, that you have no control over, right? So let's get into a bit of what is hedging. So hedging is eliminating, or at least reducing, the risk from foreign currency fluctuations. Now the benefits are, you create certainty, gain predictability. You can focus on your core business. A lot of our clients, they get preoccupied with currency fluctuations. They don't know how to handle that. It takes up a lot of their time. This is where we step in and add a lot of value. Let's take a look now at the risk management process. So a lot of the CFOs, like yourselves, they'll come to us and say, I don't have the time. I don't know where to start when it comes to an FX risk management process. So what we do is, a lot of you focus on just the execution phase, which is the middle phase here. Now what that means is just really booking your trades, getting the funds to the destination. Where we come in is we help you plan and then execute and then evaluate, right? So planning is doing things like setting your budget rate, et cetera. Execution is, as I mentioned earlier, the actual trades, getting the funds to the destination. And then finally, you have the evaluation phase. So quarterly or annually, we can review your policy, your risk management process, see if there's any adjustments we need to make, and provide feedback. So what is an FX policy? So you like the concept of hedging. Where do I start? So what's the purpose of an FX policy? You state your company's objectives. How are you going to achieve those objectives? Who's going to have the decision-making authority? And then finally, what are the benefits of this? So you remove subjectivity from your FX decisions. It's all objectivity only. Avoid future misunderstandings. And you're prepared for future adverse effects. So what this means is when the currencies are moving and you're not sure how to react, you have a policy to fall back on and rely on. What is a strategy? You have your policy. Now, what is an FX strategy? Percentage of, it's comprised of three things. So percent of hedging, tenor, and products. Percent of hedging is what percentage of your known foreign exchange exposures you want to cover. Secondly, you have tenor, which is how far you're able to book out. That depends on how far out you have visibility into your costs. And then finally, you have products. So what sort of mix of spot, forwards, and options you're going to use to achieve your goals. And this is where we come in and can help you with this. Finally, we'll talk about credit. So who can't use more credit, right? Oh, I went too far. So when you think of credit, you think of banks and loans. In this case, we're talking about an FX credit line. So a lot of the time when you want an FX credit line from your bank, what happens is that eats into other credit that you may have available to you, right? Where we come in is we work with clients, work with prospects, work with mining companies, and try to offer them an unsecured credit line, with no deposit. So that can be very beneficial. Let's look at one of my actual examples. One of my current existing clients. They're a Canadian gold mining company in Brazil, and they have $6 million US worth in Brazilian reals of expenses every month. And they were fully exposed to the market, so they had no strategy in place, no policy in place. We came to them, and we said, look, we can improve on things a little bit. Let's see what we can do. We created and implemented an FX policy that was approved by their board, and that gave them more certainty in their FX strategy. And now they're, after a few years now, they're a happy customer, not exposed to the market as much as they were initially, and the client's able to secure their profit margins and reduce their cash flow volatility. So if there's maybe three things to take away from today, is to ask yourself, am I delivering payments around the globe in an efficient manner, in a cost-effective manner? Secondly, when it comes to risk management, am I able to manage my currency risk effectively? And finally, when it comes to credit, could I use an unsecured credit line? That's all I have for today. Thank you very much for your time, guys.